And good morning, it's E with MarketWizards.com and eMiniWizard.com, and reminding traders that trading is a risky proposition and use capital that you can afford to lose. For most traders, I believe that they're better off getting an education rather than jumping right in and learning under fire. And that's what rooms like ours hope to do, is help people understand that there is an edge in the market if you spend time trying to learn how it operates. And even with 25 or 30 years of experience, because markets keep changing, we need to continue to adapt. So we cannot assume that things that worked in the past will continue to work. And that's why we have to be a perpetual student and learner if we are going to play this game, or any game for that matter. Technology changes and our world is changing, politics is changing, but human nature never really changes. So that is one of the edges. If we understand that, gives us a huge edge. And a reminder, our disclosures are on our website. Lastly, a reminder also that we have a webinar coming up, and hope to see some of you there. Registration is right there on our homepage, November 8th. That's a week from today. All right, overnight, we had said that let's use that 3 as support. And my thought was at the time that that was a level that should hold based on a larger time frame, OTF. We always look to OTF to control the market. Little puny day traders do not control the market. We take intraday swings and we take odds ideas. Today's first trade idea was let's use 28 as our resistance, with the idea of hoping to get back into this 19 and a half. And if we could get a little bit more than that and test the core in here, fine. But primarily we thought that that would be a convenient trade idea based on a range from yesterday's plunge in the last hour and then to a bounce high. And here you either say, well, I want to buy, or maybe I'll take a risk short side. And today's guess was correct. That would be better off having traders take profits ahead of news, and that would cause the bleed back to test our pipe. So primary targets, I thought, would be that 19, get out by news, and then if we could get backwards and test the middle, fine. But you have to realize, in proportion to yesterday's range, that's the top of the pipe yesterday. You can see it right here. So that's a good reason to be very conservative on this type of a trade, especially when we know the generals aren't necessarily in the market. And obviously this chart was the one that we guessed correctly on, that this would be our next support. And then obviously we're going to keep an eye here at this 21, 22 level today. This is going to be an important area. We can certainly push above it, but the idea is, do we get back underneath it and abandon it? And if so, then this box is for trading. So we're going to focus a lot on this chart today to see where we are and where we are potentially going. We already know potential targets upside and downside, so we're never left at a loss to figure out where is the market going once it starts to make a move. And that's part of trading, is being content with part of the move. Don't expect to get all of the move. Sometimes you're better off waiting for the market to show you what it wants to do and then participate in a small part of that move. And that's what I put in the room earlier, that this is about risk and reward. How is it that we can take the least amount of risk possible and still scrape something out of the market every day and treat this as a business? First of the month bias, we know that we have touched down the double. We're going to keep looking at these type of charts. You can see all these were black bars. So once we get rocking and rolling, we need to understand that we can come back and test any of this up here. So for now, we know this is our support box down here, and this is our fighting box. And yesterday we aborted just before that 38. So realistically, the gap back in here is an important support for now. And this 38 area is an important resistance, and this is the battlefield until proven otherwise. And we're going to have smaller battles, obviously, in between that. So I say today, first things first, let's trade yesterday afternoon's range, and then we'll make up new ideas from there. And that's all you can do, really. I said earlier, the 30-minute chart was in play. And so far, you can see that. You know, we came back down, we hit the blue line, we bounced, we've come back, we've held the pivot point, we bounced again. So this right now is a whack-a-mole pattern. And I think we've got a two-way day. I think aggressive shorts need to be a little bit more conservative than you'd like to be, because you saw this yesterday, and in your mind is the idea we can just flash down and do that. I say that, you know, it's a neutral type day, and we're trading inside that swing. That's all we know. So law of proportion says let's focus on this first, and then maybe we can eke out a few points coming towards half gap type trades and so on. But right now it's still the beginning of the month bias, and I don't want to buy into the theory that the shorts are in control. We can get a good short side trade, but in my opinion, got to be very conservative with our thinking. Think neutrally today. And right now, all we know is the overnight range. We're going to trade that range. We get near the demon, make sure you're paid. Get near the angel, make sure you're paid. And at the open, anybody that is trading this open, give the market a little time to show you the direction it wants. Typically, a half gap trade is our normal idea, but it doesn't have to come right in the first 5 minutes. Yesterday, we saw how patient shorts really did pretty well. So I'm going to advise caution for conservative traders. Don't feel you have to be in the market every single minute.
Wow.